Hi, good evening, guys. Just want to do a sound check. Can you guys hear me? Hi, guys. Can you guys hear me? I'm just doing a sound check. Hi, good evening, guys. I'm just doing a sound check. Can you guys hear me? Okay, great. All right, so I'll make a start. My name is Zach. Yet I run tradingwithzach.com. I'm just going to give you a description of the site. So I've been swing trading the markets as a professional swing trader the last 6 years, and earlier this year I started tradingwithzach.com. We provide trade alerts, option trade alerts to the trading community and those people who especially are new to trading. And with our trade alerts, we give tutorials. Mainstay, the bedrock of our strategy is technical analysis. We basically look at charts and we turn off the news, and that's a very successful strategy. So it's working very well. And so tonight I thought I'll make open floor. We can discuss whichever stocks you guys want to look at. So let me just get the charts on the screen. So I'll kick off with Tesla. So those of you on StockTwits would have seen that picked the low in Tesla last week, or about 10 days ago, nearly 2 weeks ago, on the 2nd and 3rd of November, where it bottomed here, and that's proven thus far to be a good solid low, and we're winding our way upwards off that base. I want to discuss Tesla. So basically looking at this now, so we've established a low, and Tesla should get up to around the 330, perhaps the 340 level. Let me just do a Fibonacci, a retrace from this high here. So yeah, there's a lot of resistance at around the 340 level. I don't know if we will get up there that far, but we've got the 50 moving average coming downwards, and that will prove to be some resistance. So I'm looking in the next few days, perhaps in the run-up to tomorrow's launch for the semi-truck that Tesla are doing, perhaps I'm expecting some more upside. There are a lot of shorts in this thing. There's around 30%. Let's have a look. Around 30% of the share flow is short, and that should give us a big move over the next few days. Now, reasons for the low. There was a lot of talk out there that Tesla's going further, Tesla's going bust. There was a lot of commentary saying that the accounts are no good, its cash flow is very poor, the company itself is not making money. But basically, I was able to call this low quite simply because I was reading the charts. So let me just go through the factors, and you'll find when you're trading, you're at a significant advantage if you turn off the news and you don't listen to all the hearsay out there. Turn off CNBC, turn off Bloomberg. Just read the charts. If you can read the charts, it will take you to the promised land. Let me just show you why this was a low, and nobody believed it at the time. So the first factor that grabbed me when I saw this on the Friday morning was the fact we've got this cross here. Now, a cross normally indicates a change in trend is about to occur. So we've got this move down from mid-September, and we've got this cross. Now, the cross occurred on good volume as well. On that day we had around 20 million shares. So that's showing you that there is gravity behind that doji, behind that cross. So that's the first factor. The second factor, by the way, whenever we trade, we want factors. We want lots and lots of technical factors. The more factors, the better. So the first factor is that doji cross, which normally indicates a change in trend. Then we've got a gap fill. Let me zoom in here to this date, May the 4th. Price closed at the bottom of this body, and the next morning it gapped up and opened here. So when price comes down, it's known as filling the gap, and that's what's happened, and that's proved to be a solid level of support. So we have two factors there. The third factor is looking on the right hand side. We've got the weekly chart, and I use, by the way, on the left hand side I have the daily chart, on the right hand side I've got the weekly chart, and I use 3 moving averages on both time frames: the 20, the 50 and the 200 moving average. So looking at the weekly chart on the right hand side, we can see Tesla is still in a long-term uptrend. The 50 moving average on the weekly chart is still moving upwards. There's no major technical damage here on the long-term basis. So we've come into this support, and we've come from this area, and we've come down, we've hit the 50 moving average on the weekly chart. Remember, very, very few traders out there look at weekly charts, but the institutions look at them the whole time. So if you want an edge in this market, you've got to be looking at weekly charts. On weekly charts that you just simply cannot see on the daily chart. They're obscured. So you can see we established a base here, and we're starting to bounce. Now, there are more factors for the trade. I don't know if you guys are familiar with the Fibonacci retracement tool, but basically I'm going to draw a ruler, or use this ruler to measure the distance from the 2016 low and take it all the way to 2017 high. And this is basically a measuring tape, and the dotted lines are percentage levels of retrace. So for example, the 50% retrace here is exactly halfway from the low to the high. Now these levels should be strong levels of support. Again, you'd never take a trade just by the fact, or just for the fact that the stock has come down to this level. But the fact is, we've got 3 factors already, and we're now into the 38.2% retrace, which is this dotted line here. So again, that is, I've lost count of how many factors we've got, but that's, I think, the 3rd or 4th factor. So that's another factor in our kit bag that tells us this is a strong level where the institutions are going to step in. Remember, I'm not looking at the news. I'm not looking at Tesla's company earnings report. I'm not interested in what analysts say. I'm not interested in what anybody on CNBC or Bloomberg says. I read the charts. If you know how to read the charts, remember the charts don't lie. Analysts, journalists, even company directors can and do lie, right? So you've got to take what people say with a pinch of salt. Just read the charts. Now, if we go further, if I draw this Fibonacci tool all the way to the low of mid 2010, when the stock first went public, you can see the 50% mark is the halfway point from the low to the high. And what have we hit here? We've hit the 25% retrace. So you can see these levels are very, very strong. They carry a lot of weight, and institutions use them all the time. Look at that. Amazing. And that's how this thing is getting a bounce. It's nothing to do with the news. Again, forget the news. Read the charts. You will simply learn where the institutions are going to step in. And that's why we've got this bounce. So I'm looking for a bit more upside in the coming days. I'm hoping we get up to 340. That would be great if we do. It's very difficult to say if it will happen tomorrow, the day after, or next week. Okay. So that's the analysis on Tesla. Now, does anyone have any questions? Okay, so I'll just conclude with this. Now, again, a lot of people out there are saying, oh, Tesla's going to new lows. This is just a dead cat bounce. It may well be a dead cat bounce. I can't tell from looking at the chart at this stage if that is the case. What I need to see is how far this stock gets up. If it can't get past the 50 moving average on the daily, and now this is something to be aware of. The 20 moving average on the weekly is now turning downwards, which is telling us on the shorter term time frame this is now entering a downtrend, which is obvious, as we can see since September we've been in a downtrend. But by the fact that the 20 moving average on the weekly chart is now turning downwards, that is telling us, there are some warning signs, there are some cracks here. This thing may start to turn down. So what you would wait is you'd wait for this stock to get up to around this area here, which would coincide with around this area here, and see what happens. I wouldn't go all in on short. We have to see what happens when the stock gets around the 340 level. If it hovers around here and it can't get above these moving averages, then we know that there's downside to come. If it hovers here for a day or two and pops straight through or gaps up, you know this thing may even go back up and test the high. But it's too far ahead to say. I'm just laying out the various scenarios that may occur. Okay, shall we move on to another stock? Does anyone want to ask me anything about another stock? Or you guys are new to trading, do you want me to explain some of the terms? To talk about options? It's an open forum, guys. So tell me, you guide me. Okay, right. It's great to have you on board, especially if you are new, because that's something that we specialize in on the site, right? So let's look at GoPro. I'm going to talk through GoPro, and then I'm going to talk a bit trading. Okay, so I'll go through, before I talk about GoPro in detail, I'll talk about charts. Okay, so a lot of traders out there have different strategies. You know, when somebody says they're a trader, it can mean anything. Some people chase the news, some people trade earnings, some people study company reports and then decide what to buy or sell. So there's so many different facets to trading. So on tradingwithzach.com, I am a technical trader, meaning I just look at charts and I turn off the news. So I'm the opposite of what a lot of other traders do. So let me tell you a bit more about my charts. So on the left hand side, I've got the daily chart. You can see the D up here. So each candle represents 1 day's movement in the stock. So the red candles mean those were down days. The stock opened around this level here, let's say on this particular day, and it proceeded south and closed there. The green candles are up days, so it's quite straightforward. Now the coloured lines are moving averages. I've got the 200 moving average in red, and what that means is the software calculates the average of where the last 200 candles have been, and it will draw a line as each day progresses, showing the average of where the last 200 candles have been. So 200 days goes back almost a year, and you can see the line moves very, very slowly. On the other hand, the 20 moving average is this blue line here, and it calculates the last 20 days average where the stock has closed, and therefore, because it's over a shorter time frame, the blue line is very much more fluid. Now, how we use these moving averages is to put it in a nutshell, the moving averages themselves are sort of supports, if you like, supports and resistance. So whenever a stock comes down into a moving average, it will normally hit it and then get a bounce. So if we look here, you can see the stock hit the 200 moving average on this particular day and it bounced. Again, we would never take a trade just on one factor alone, just by the fact a stock has hit a moving average. We would not take a trade and say, oh look, it's hit the 200 moving average, we can buy it. But we need factors. So moving averages is one particular aspect. Now the direction of the moving averages will tell us if the stock is in a downtrend or uptrend and on what time frame. So for example, on the longer term time frame, GoPro has been in a downtrend because we've got the 200 moving average moving downwards. On the shorter term time frame, it's been in an uptrend because we've got a 50 moving average which is going up, although that's now turning down. But for me, the most powerful time frame to use is the weekly chart. So here, each candle represents 1 week's movement in the stock. So for example, in this week, beginning here, price opened here at around $8.30, and by the end of the week it reached around $10. And the moving averages will be different on the weekly chart as compared to the daily chart. But the moving averages will tell us whether a stock is in an uptrend or downtrend. It sounds obvious, but it isn't. When you're staring at stock charts, you really do need the moving averages to tell you what the stock is about to do. Okay, so in terms of GoPro, so that's a bit about charting. GoPro, I like it here for a long. Now, the term long, I'm not sure if you're familiar with it. When we say we're going long, we mean we want the stock to go up. Just like conventional investing, you buy stocks, you buy them at a given price, let's say $10, you want them to go up and you'll sell them later on. That's called going long. Whenever we say we're going short, that means we want to profit when the stock price, or we will be profiting, or we are aiming to profit when the stock price goes down. Now, how we do that, I'll talk about that a bit later on. So for GoPro, I think GoPro is a good long here. Let me show you why. And again, the main thing I want you guys to take away from this is I'm not looking at the news or company reports. I ain't interested. I'm just looking at the chart and the chart alone. The chart doesn't lie. Right, okay. You can see this gap here that we created in, or the GoPro created in August. On that particular day, the price closed at $8.25. The next morning at 9:30 a.m., the stock, I imagine, announced good earnings, and the stock rocketed pre-market 16%. Now, these charts only show the market action during the main market hours, which is 9:30 a.m. Eastern Standard Time until 4 p.m. So early in the morning, GoPro announced good earnings, and in pre-market, traders, banks, institutions, whoever it was, took the stock up, and at 9:30 a.m. it opened here at the body of this candle here, and that creates a gap on the chart. Gaps are levels of support. So we proceeded higher during September and August, and now we've come all the way down. Let me put a line in. This, you can see, this is where the gap was created. The stock has now come down, and it's just pierced the gap, but this gap is a level of support. So the $8.26 level is a level of support, and the stock should start to gain some traction towards the upside. But that's only one factor. One factor is never enough. It's never enough. Now, the next factor is a trend line. If we go back, let's look at the weekly chart on the right-hand side. Everybody with me so far? Okay, great. Okay, so I'm looking at the weekly chart. We can see we made a big low here in March, and then we've sort of gone sideways, and then we've gone up, and we've come back down again. Now watch this. I'm going to draw a trend line. I'm going to almost joining the dots. That is a second factor. The fact that we've got a straight line here, but on a third hit of the line, we should get a bounce. So that's now our third factor, or rather our second, I beg your pardon. I keep losing count how many factors we've got. We've got the gap fill, we've got this trend line. So the trend line is the second factor. Now, remember, institutions move markets, not you and me behind our tablet or laptop at home or trading on our phone. We do not move markets. The big institutions, the big banks move markets. Their aim in life is to force out the small investor. So although this is a good strong level of support, as is the gap fill, sometimes they take it through to get the average amateur investor on the wrong side of the trade. He'll chicken out, he'll think, oh no, this stock's going even lower, let me get out of here, and the institutions will pick up their shares from them at cheaper prices, and guess what? They will turn it around and take it higher. So it's not unusual to get a pierce of these trend lines and a pierce of these support levels. But we've got two factors so far. Now let me show you the third factor. Let me get rid of the trend line. Let me bring out our Fibonacci tool again. So this is a ruler. We're going from the all-time low in March to the all-time high in September. And again, just to make it clear, 50% mark is of course halfway between the March low and the October high, and each of these dotted lines, the 25%, 38.2, 50%, 61.8 and 75% levels, are strong levels of support. So we've already got two factors. This is our third factor, the fact that we are into the 75% area. Now we got a brief bounce earlier in the week on Monday or Tuesday. We've come back down again, but the fact is with a gap fill and a 75% retrace level, And remember, the 75% level is the last line of defense. It's the last one before we get to double bottom. So this is quite a strong level of support. So that's our third factor. Fourth factor, on weekly charts, let me put a circle in. Bottom of the body on the weekly chart is a strong level of support. So let me circle this here. You can see the bottom of the body. Let's zoom in. This base here, let me put the line in. The line at 831 is a strong level of support. Now you can't actually see that. If I put a line in at 831, you can't really see anything there. There's nothing there, although there is that high of that candle there, but you can't see anything of significance. That's why looking at the weekly charts will show you levels. It's like X-ray vision. You can see things that you can't otherwise see on the daily chart. And remember, if you want to trade with an edge and you want to be ahead of the game, you have to be on the side of the institutions. You've got to trade with a significant advantage, because most amateurs don't know what they're doing, following stocks, and they're just looking. If they are looking at charts, they're only looking at the daily chart, and you can't see half as much as you can see on the weekly chart. So the fact that we're into this base here is also a level of support, and you can see the stock got a bounce there. So I think GoPro is a good buy here. Again, we're in an uptrend as well now. Look at the weekly chart. The 20 moving average is now moving upwards. So that means on a shorter term time frame, we are now going in an uptrend. So this thing should gain a lot of traction here from the institutions, and in the coming days and weeks, this thing should turn higher. Okay, over to you guys. Would you like to know? What I'll do at this point is also now introduce my website, which I mentioned briefly. So basically, I teach people trading, but my site is very different to a lot of the sites. We keep it very, very simple. We just look at charts, as you've seen, and we've got one fixed monthly subscription of $99 a month, and there's no more fees or no more courses. Basically, rather than a lot of other websites, you see a lot of these trading education seminars advertised, all plastered all over Facebook. I don't believe in them, because they're not teaching you live. The best way to learn, rather than learning theory, is to watch somebody trade and have him explain what he's doing and why. So just as I explained about GoPro, and then we talked about Tesla, I'm issuing trade alerts to my subscribers. So let me show you on the site here. So let me show you the track record. What I'm doing is I'm alerting my followers and telling them when I'm buying or selling. I'm going to show you one of the trade alerts so you can see. Now that's our track record. So I'm telling people when we're buying and when we're selling, and I'm giving them explanations as to why we are doing it. Now after they watch for a year, by the way, I don't expect people to trade at the beginning. The aim should be just to watch and learn, not to trade. If you look, there are some losses in there as well, of course. Nothing's guaranteed, but we try and keep the win ratio as high as possible. Let me just take you to the bottom. this is something to highlight. If I can just scroll, you can see we're in a win ratio of 69%. So of the trades we've done, basically since the website started, we've done a total of 62 trades. 42 of them, that's 69%, have resulted in a profit or at the very least break even. So that's all of the green trades here. And to trade at that level is, what should I say, a high standard. That's a high standard of trading. And all of these results have been gained by reading charts and turning off the news. So let me show you what a trade alert looks like. This works. I like it when I put the numbers in. Again. Yeah, Sean, I'll come on to that in just a moment. Right, so this is an example of a trade alert. So let me show you the entry on GoPro. What I've just described to you, I actually put out to members a couple of days back. So I'll tell them very briefly in written form reasons for the trade. For those people that are on the go and they're on the cell phone, they can look at the chart that I've quickly drawn, telling them why GoPro should be going higher, and then there's a 5 or 10 minute video there explaining basically what I've explained to you now. Now in a 5 or 10 minute video, again, it's short and sharp. Nobody's got time to watch hours and hours of video material every night. I've been on these other websites for a number of years where they're just feeding you so much information. It's information overload. A lot of it you don't even need to know, and it just clouds your whole understanding. So the way I'm teaching my students is just by watching these 5-minute videos whenever we enter a trade or whenever we exit a trade. You know, I'll put a 5-minute video, here are the reasons for it. You'll learn, if you watch these videos day in, day out for a year, they're only 5 minutes long, 5 or 10 minutes long, you will learn this very, very quickly. Of trade we closed. Oh yeah, Sean, while we're here, I'll tell you. Yeah, I'm only looking at the charts for entry and for exit as well. I'm guided by the chart. And you know, when one becomes experienced, one can gauge and get a good understanding as to where is a good point to exit. Now, we're not always spot on. A lot of the time, you know, we do reasonably well. But you're basically guided by the chart, and then that's when the experience comes in. So that was another trade alert that we entered. Yep, that's great that you got in at GoPro at 8:12. So now we'll see this together over the coming weeks. How powerful these levels are. You know, I'm very confident about GoPro. The only thing I would say to you is, especially if you are trading options, do not be in a rush for this thing to play out. It may take a good number of weeks, maybe even a month or two, if not perhaps longer sometimes, for these levels to work. The levels hold, but it may take time for the thing to gain traction. So basically that's the site. Show you. This was another trade. Let me give you an example of technical analysis and how you will beat the majority of other traders hands down. This was a trade, very interesting one. Yep. Okay, look at this. 122% profit, and this is the video on the front home page. But basically, I entered T-Mobile short, meaning I looked at the chart and I said to myself, right, this chart wants to go down, let me buy options on it. And I was short T-Mobile. I bought put options. We'll talk about options in a moment, especially if you're not clear on them. And basically 10 days to 2 weeks later, T-Mobile dropped 7%. My options went up 122%, and I grabbed the money and run. I closed the trade and walked away with that profit. Why did T-Mobile go down? T-Mobile went down because they were in merger talks with another telecoms provider, and those merger talks failed. The merger talks failed, and basically T-Mobile dropped, and I walked away with 122% profit in about 10 days or 2 weeks. Now, why was that? I didn't even know that T-Mobile, let me just get it on the chart here. I didn't even know, would you believe, when I entered the trade, you'll laugh at this, when I entered the trade and I shorted T-Mobile, I did not even know they were in merger talks, or they were in prospective talks with another company to merge. It was public knowledge at that time. The charts will tell you the news in advance of time. Now, what I want you guys to do at some point later on is go to the front home page, because I've done a video on that, on the T-Mobile trade. I don't know, some of you may have seen it already. But if you just go to the front home page and scroll down, so that's a 2-minute video. It's just a promotional video, but I'm just basically showing you how you will beat 90% of other traders. You got to watch the video to see it, and it's to the theme tune from Superman. But basically, it shows 90% of the trading community were thinking that T-Mobile would be going up. I imagine because of the merger, and literally 10% said it was going to go down, and I was in the camp that was obviously in that 10%. The charts will take you to the promised land. You have to trust them, turn everything else off, and just let them tell you what to do. Wait for the trade to come to you. Right, okay. Now, I don't trade stocks directly. Let me give you an example why. So let's look at that T-Mobile, and you'll really understand this. Okay, we're already here. Okay, so I entered short around here, right? And T-Mobile dropped, as I said, around 7%, which is to around there. Okay, or it even dropped around 10%. Now, how big is your trading account? You've got a $10,000 account. How much? And let's say you're going to buy shares, or you're going to buy stock, or you're going to short stock directly. How much are you going to put into one trade? No more than 10, 15, 20%? One would be foolish to put their whole account into one position. But let's say you put in 10% of your account into T-Mobile, and you profited by 10%. Well, how much would you have made? Very little. Very little. You need an enormous amount of capital, and people don't realize this. You need an enormous amount of capital. Oh, let's get back to the chart. I beg your pardon. Sorry. Let's go to T-Mobile, guys. Okay. You need an enormous amount of capital to make money in the markets if you are trading stocks directly. Because even if a stock you're trading goes up 10% or 15%, you need a hell of a lot of capital for that 10 or 15% move to be meaningful to you. So because of this, and I noticed this problem really early on when I started learning to trade, because of this I use options. Now, options, as you saw on the T-Mobile trade, options go up substantially more. So T-Mobile dropped from my entry to exit, it dropped around 10 or 11%, but my options went up 122%. Now you would think it's a no-brainer. Why does anyone ever trade stocks directly? Why do they buy and sell stock? They should just trade options. Don't worry if you don't understand what options are at this stage, just run with me for the moment. So the thing with options is if you are wrong, your options can decay in value all the way to zero. So you have to be very careful with options. You do have to tread carefully. The rewards are great. The rewards are spectacular. But if you're wrong, you need to understand that you will lose up to 100%. So in terms of using a stop loss, generally, I do not put a stop loss into the computer. I don't put it in. Because, again, there are sharks out there. Your broker can see where you've put your stop. And all the institutions have access to each other's computer systems. How it works, I don't know exactly. I don't need to know. All I know is don't play your cards. So I don't put a stop loss into the computer, but when I see a trade is failing, I will manually say, right, I'll manually close it. And that's my stop loss. It's a manual stop loss. Sometimes, especially if my options expire much further down the line, many months ahead, I will still keep the trade open, and I may end up walking away with 100% loss. Now, the importance with trading options is every time you enter a trade, you are aware that you could lose 100% if you're wrong, because there's no guarantee in trading. We're only trading, as it were, when the odds are overwhelmingly in our favor. Just like a casino. It's like the casino, it's like gambling, but you're the house. So, only ever trade an amount that if it goes wrong, it will not hurt your account. That is of prime importance. And if you look at my site, especially in the free stuff section, I've got a lot about the rules you've got to follow. It does take time, it takes discipline, it takes practice, but once you've got to understand these factors. I don't use a physical stop loss, but I do close out of positions if I see they're not working. Okay, so guys, if you like what I've shown you so far, and you want to learn this stuff, come onto the site tradingwithzach.com, take the 7-day free trial, and I mean you've seen if you've heard me for the last half an hour, 45 minutes talk about looking at charts, and you enjoy this kind of stuff, you're going to love being a member on Trading with Zach. It's $99 a month. You can cancel it at any time, and this is how we're different to other online courses and all these trading seminars. You have to pay thousands and thousands of dollars. I've got a cousin down in Florida, and he's a distant relative, so I don't talk to him that often. And he saw me on Facebook that I'm doing trading and that I've got a trading website. Listen to this, guys. He said, "Oh wow, it's going to be interesting. Let's talk. I've just gone on one of these trading courses that I saw advertised on Facebook." I said, "Oh my gosh, how much did you pay?" He has just paid $17,000 to go on these courses. They've taught him. I don't know what they've taught him exactly. It may well be that their standard of teaching is good. I don't know. But the fact is, for him to have to fork out so much money on day one, and when you graduate from these courses after a month or two or however long it is, you're not experienced. You're just starting. So you've parted with so much money, and you're not even sure you're going to continue doing it, or you're not sure you're going to be successful. So whereas my model, as far as my members are concerned, is just for $99 a month. If 2 or 3 months into it you think, I don't like this, I'm not enjoying it, what have you lost? $300-400? No big deal. But those that stay and stick with it, okay, Mustang Craze, great to have you. Those that stick with it, after a year, 2 years, how much have you paid? $1,200, $2,400 gradually over that time. You've learned so much, so it's much, much more palatable in terms of course fees and paying for your stock education. I'd urge you guys, come and take the 7-day free trial, and then, if you like what you see after a week, by all means, come and join us. Guys, I'm going to take a coffee break. I'll be back in around 15 minutes if anyone's left. There'll be others coming in the room, so I'm here for the next 2 hours or so. So it's an open floor. People will be coming and going all the time. So feel free to stick around, and if you want to ask anything, just type it in the box. Okay, I'll be back shortly, guys. Hi guys, okay, let's take a look at JD. This one I think bounced in the last couple of weeks. Come back in. Right, okay. So, just so you know, the right hand side I look at the weekly chart, and I've got here the 20 moving average and the 50 moving average, and I also use the 200 moving average. These three averages I use. Okay. This is looking like it wants to go lower. I wouldn't buy this stock here. Let me explain why. Okay, we've made a low here, bounced. The 50 moving average on the daily chart is moving downwards. That's telling me it's now in a shorter term downtrend. However, more importantly, the 20 moving average on the weekly chart has now turned downwards. This is now turning into a medium term downtrend, and the fact that we can't get above that 20 moving average on the weekly chart, and the fact we popped above it for a day, 2 days, and we've come back down, this thing wants to go down. Now, I wouldn't short this now. That means I wouldn't jump on board and trade it to the downside just yet. I'd want more of a setup. I'd want to see more evidence that we hover underneath this 50 moving average, because if we pop above it in the coming days, it's hard to tell if we will, this thing could start going higher. But at the moment, it's looking like it wants to go to the downside. Any trade you take on it, be patient, because we're coming to here now. You get this sort of Santa rally. It's very difficult to say, but it's inclined to go to the downside. Okay, let's look at the STI. Okay, there's not enough data here. The stock's not been going long enough. When did it finish? In September. I can't see anything here, neither to the upside or downside. Pass. I can't comment. There's nothing here that tells me whether it's going up or down. Give it a few more months. We'll get some more moving averages. Maybe we can make something out of it. Okay, so now let's look at JP. Right, okay, this thing's in an uptrend. Looks like it wants to go higher. Now, this thing, I wouldn't jump onto this now. I would wait for this to go sideways, because stocks need to consolidate. It's so overbought. It's well above these moving averages. Now, this is in a long-term uptrend. We've got the moving averages on the weekly charts turning upwards. Let this thing go sideways for maybe a month or two, and if we get a nice setup here, as long as we stay above the 50 moving average, this thing is looking like it wants to go higher. But we need these moving averages on the weekly. Follow Bloomberg or CNBC. I literally just rely on the charts to tell me what to do, and when to trade, when to enter, and when to exit. And let me just show you alerts we've been providing to members. So this is our front home page. You can look at our track record. It's available for the public to see. So we provide trade alerts on options and stocks. Game. See all the green trades there we've had in a row. And we're doing options, so we're getting much bigger profits. Let me scroll down and show you. The important point is to scroll to the bottom. You can see at the bottom our win ratio 69%. So 69% of the trades we're taking, we are walking away with profits. Profits are at the very least break even. These are trade alerts we're providing to our members. In addition, we don't just give out trade alerts, we explain the reasoning behind it, just like I'm analyzing stocks for you guys now. Whenever we issue an alert, we provide a 5-minute video, a very short and succinct video showing why we're buying something or why we're selling something. So we're not only providing trade alerts, we're providing top-notch trading education. And our regular subscription is only $99 a month. And basically, when you watch these setups, just like I'm going through charts with you now, when you watch these setups week in, week out, after a year, you'll be doing this in your sleep. You'll be analyzing charts in your sleep, and you'll be able to, sort of take trades with confidence. Don't forget the way the institutions move markets. It's not mum and dad or mum and pop, on their tablets at home that are moving stocks. It's literally the institutions. And by reading charts and ignoring the news, we are basically trading on the back of what the institutions are doing. So we are trading at a significant advantage. Okay, anything else you'd... I'll just briefly mention, in terms of the education we're providing, for $99 a month, it's basically gold dust. And I'll explain why. I've got a cousin down in Florida who, he's a distant relative of mine, so we don't talk very regularly. But when he saw I've got a trading website, he called me up and he said, "Oh wow, I've just come off a trading course. I saw it advertised on Facebook, and I've gone on a course and it's really good. And start trading out." I said, "Whoa, hold on. How much money have you spent on this course?" He said, "I've done 3 courses, and I've spent a total of $17,000." And my heart sank. No matter how good that education is, and he seems to be very confident with what they've taught him, but the fact is he's coughed up $17,000 of capital, and there's no guarantee he's going to become profitable. Now, he started trading, but he's obviously not experienced yet, and it does take time to get experience. But he's forked out $17,000 up front, which I think is extremely steep. And you don't even techniques he's learnt on worth their weight in gold. I don't know. Whereas our model on tradingwithzach.com, it's $99 a month. You learn as you go. All the videos are not long-winded. We get straight to the point. Whenever we issue a trade alert, it's a 5-minute video. If you watch these videos day in, day out, as we issue trade alerts, you will learn this stuff very quickly, and you will learn it very, very cheaply as well. For $99 a month, after 2 or 3 months, if you think, "Oh wow, trading's not for me, I'm not enjoying this," how much have you lost? $300 or $400, if that. Cancel your subscription and life goes on. Whereas these other online courses and these online advertisements that you see, they're very, very expensive, and you don't know what you're going to get in return. You don't know if you're going to be profitable. Whereas the model we've got here on tradingwithzach.com is you will watch the trade alerts as we issue them. You will see them in real time, and you will understand why we're taking it based on the charts alone. So if you like what you've seen so far, and you've seen our other videos on YouTube, on the YouTube channel, come along. We do a 7-day free trial where you'll get trade alerts for a week. You'll get access to some of our videos, and if you like it and you want to learn this stuff, learn how to profit. You want to trade on the side of the institutions that move markets up and down, then for $99 a month, you'll learn this stuff pretty quickly. So if anyone has any other questions, So I'm looking at a trade here that we recently entered yesterday, and this is on Vale, which is a miner, industrial metals and minerals. This thing wants to go lower, so I'm not going to be buying or shorting the stock directly. I buy put options. So I'm estimating that this stock wants to get down to around the $9 area, which is a drop of around 7 to 10%. You know, you're going to trade this directly, for you to make a 7 or 10% profit, and for that profit to be meaningful and worth something, you've got to have a massive account. Which is why trading stocks directly is a very expensive business. So I trade options, and I'm trading this such that if this thing gets down to $9, I should make 80 or 90% return on the options. In return for the options, although the returns are very good, one has to be aware of the downside when you trade options. If you are wrong, there is a chance your options can go down and you could lose up to 100%. So you have to manage your risk very sensibly. You've got to approach this with a mature attitude. But that's the kind of stuff we teach here on tradingwithzach.com. So the people we take under our wings, we guide them on how to find great trades. They watch us, they copy us. Some people don't trade, they just watch and learn. They're not confident to trade it, which is fine. Nobody has to trade anything at the beginning if they don't want to. You've just got to watch and learn this stuff. As I say, if you watch the trade alerts week in, week out, yeah, you'll do this stuff in your sleep. Not already on the site, just jump onto tradingwithzach.com and just sign up for this free 7-day trial. You don't have to put your credit card in. It's literally just choose a login, username and a password, and boom, you're in for 7 days. Take a browse around. There's a lot of resources on the site. Just show you. Back at the front homepage again of tradingwithzach.com. So if you look at the about menu, see there's my story, which tells you a lot about how I got to where I am now as a successful trader. We've got our track record, frequently asked questions, a glossary of terms. Let me just go through that. That shouldn't be interesting. Can I just ask the people in the room watching now, are you guys sort of seasoned investors and traders? Are you new to trading? Where are you on the experience scale? Just help me out, then I'll know which way to steer the discussion. As I just want to do a sound test. Can you guys hear me? I want to make sure, SP, that you can hear me. Anyone else who's online with us, just want to make sure you guys can hear me clearly. Sound test, can you guys hear me? Everybody hear me? Okay, so I'll just go through some of these terms. Assuming you guys aren't so experienced with trading and it's relatively new to you. So bearish, whenever you hear somebody say they're bearish, it means they think the stock they're looking at will be going down. Let's look at scroll down this list. A lot of the terms that come up that people frequently ask about. Okay, bullish. When somebody says they're bullish on a stock, they're of the opinion that the stock will be going higher. Okay, a call option. When we think a stock will be going up in value, we buy call options on it. And we buy the call options for a given price. Let's say it's $1. The stock will go up however much it goes up, and then when it's time for us to close the trade for a profit, we will sell those call options. At tradingwithzach.com, we don't exercise the options. Our methodology is simply to buy the options and sell them later on for a profit as the underlying stock moves in our favor. So when we think a stock is going to go up, we buy call options, and when we think a stock is going to go down, we buy put options. So we're still buying something, but the put options go up in value as the underlying stock goes down. And whenever we buy put options, it can be said that we are going short a stock, although we're not physically shorting it, we're not borrowing shares. It's known as going short. So whenever I say in the videos on the YouTube channel or any of the trade alert videos, whenever I say I'm short a stock, it means I've bought put options and I'm waiting for that stock, or I'm trading it such that when it goes down, I will make a profit. Terms that I get asked. Guys, would you like me to get any stock for you? Is there any stock you're stock that you're in that you're wondering with out of? Continue. Thanks, SP. I'm going to take a break for 10 minutes or so. I'll be back here if stock, if they have any question about trading with Zach, else to do with trading, just type it in and back to you in about 10 minutes or so. Thanks, guys. ASP, let's take a look at EA. Okay, where are we? Okay. Stock, okay. Stock for now has stopped going upwards. Obviously, you can see that. A lot will depend on what's going to happen with this 20 moving average. I'm looking at the weekly chart on the right hand side. So when we've got the 20 moving average moving upwards steeply, it means the stock is in a well defined and established uptrend. That 20 moving average is now petering off. That could be a sign that the stock will want to turn lower. Maybe it's tired and it wants to consolidate all this move. So a lot will happen is we'll be able to tell what will happen as the year progresses. Now, while we are below the 50 moving average on the daily chart, this thing will be inclined to move to the downside, and especially if this 20 moving average. Looking at this, I don't see a trade on it. I wouldn't yet short it. I wouldn't play it to the downside yet. Neither would I play it to the upside, although downside is favored. But again, one of the nuances of trading is we are in an up market today. The S&P 500 and Dow Jones opened down, and by the end of the day they were back up. So to short certain stocks, especially stocks that are still in an uptrend, is a difficult endeavor. Let's look at the other one for you. Right, okay, now see what's happened here. It's a similar story. Stock came down. This is a similar thing to what we were looking at on EA. We came down. We're below the 20 average, which has now gone sideways. We've popped above it, but the stock really hasn't made any headway. We're back down. Okay, this thing wants to go lower. This thing wants to go lower. This, I think, is done for now. What's especially telling, let me zoom in. Look at the right-hand side. Look at the fact that we are now underneath the 50 moving average. So this is showing weakness of, and we've been under it for 1, 2, 3, 4 weeks now. And the fact that we have this 20 moving average turning downwards, this stock looks like it's topping out. Daily chart on the left, this thing wants to go lower. There should be some more downside on, as long as we stay below the 50 moving average, and that one, the average turns downwards, this stock is inclined. BB. Now, can you see here we've bounced off the average in an uptrend. Stock or this ETF is still in an uptrend. A lot will depend on what happens when we bounce. We should get a bounce here. We're into solid support, so that actually should be a long trade. So this is actually a good point to enter. In fact, a very good point to enter. Thanks for bringing this to my attention. I like this one. Really, really good example. So we've come down, we've gone straight through the 20 moving average, and we're now into the 50 moving average on the weekly chart. Remember, weekly charts are very strong. We're into this pivot low here. That's a support level. This thing should get a bounce. Now, how high will it go? It depends what happens as it approaches the 50 moving average. And now look at this. This 20 moving average is turning downwards. It could be the fact that the stock may want to continue downwards. So that's much further down the line, but I would suggest this thing should bounce up to around the 320 level, 320, 325. Somewhere around that, in that range. But again, we need to see how it does it. Does it go straight up? In which case, yep, that would tell us it's going to go higher. Or does it meander and does it get stuck below this 50 minute? IBB. Right, okay, down, down, down. This thing wants to go down. The fact that we closed here below the 50 moving average, we've got the 50 moving average on the weekly chart moving downwards, and we're now below all the moving averages here. This thing wants to go down. How far will it go down? Very difficult to tell, because there is a level of support here. It's too late to short it. You wouldn't short this. You wouldn't go short this because it's already gone down. It may meander here for another few weeks or months. Difficult to tell, but this thing is in a. This thing wants to go lower. These stocks with lower volume can get beaten up very, very quickly, because all it takes is a few sellers to sell, and the stock will get slammed down towards the 450 level. But those are some good stocks that we just looked at. Anybody else have any questions? Any stocks they want me to look at? Do they have any questions about tradingwithzach.com? Joined us. Welcome to this live Q&A session with myself. My name is Zach, and I run tradingwithzach.com. Provide stock and option alerts to our subscribers, but perhaps more importantly, on every trade we enter, we provide a 5-minute video showing why we've entered a trade, and this way this is how our subscribers learn very quickly, because we get straight to the point. We charge a monthly subscription of $99 a month, but we guide people technical analysis. Our advantage is the fact that we don't look at the news. We're not interested in analyst reports. We're not interested in the company earnings reports. We literally just look at the charts and charts alone. Example of how that really gives you an edge in the market. Don't forget, people watching the news and chasing stocks, just following the news, they're already late to the party. That's not the way the institutions move markets. Now, of course, it's the institutions that move markets, not mum and pop at home. If we trade on the back of what the institutions are doing, we're always going to have an edge. And basically, by reading charts, we can see levels where the institutions are going to step in, and we down a stock. So let me give you 2 minutes long. But basically, T-Mobile dropped last week because it was in talks to merge with another telecoms provider. The talks failed, and the stock sold off on that bad news. Now, 90% of traders out there, including they were bullish on the stock. They were thinking, wow, this merger is going to go ahead. The stock's going to go up. They were all buying around here. Now, I took one look at the stock, and you'll laugh, I didn't even know that T-Mobile was in prospective merger talks. I just don't look at the news. It's of no interest to me. It's just a distraction, and it leads me. So I looked at this chart, and I said, well, look, we're stuck below these moving averages. The 50 moving average is moving down. Looking at the weekly chart, look, the 20 moving average is moving downwards. The 50 moving average is petering out. Especially given the fact that we're stuck below the 50 moving average, this thing wants to go down. So I shorted this thing around here. Went up initially for a day or two, and then the news came that the talks are failing, they're not going to merge, and boom, the stock dropped, and I sold my option. When I entered the stock, I didn't even know that T-Mobile, I didn't know. 90% of traders on StockTwits and the other trading forums, they were bullish. They were all buying this stock thinking, wow, it's going to merge, it's going to go thing. Read the charts, turn the news off, it will lead you to the promised land. Like what you've seen, or you like the way I'm describing how we're trading by looking at charts, I get straight to the point. I don't use many indicators. Come and join me on tradingwithzach.com. Okay guys, I'm going to take a 5 to 10 minute break. I'll be back soon. In the meantime, in any shortly. Okay, hi guys, thanks for joining. This is Zach here from tradingwithzach.com. If anyone wants to ask any question, if they want me to look at a stock to give me analysis, I'll be happy to do so. Before I do that, let me just tell you a bit about our website, tradingwithzach.com. So we provide trade alerts to people who want guidance on how to trade best. Page here. So let me just take you to our track record page. In addition to providing trade alerts, we don't just give out trade alerts blindly. We teach our subscribers, we teach our members how to actually find these trades. Subscribers are learning how to find good trades. They're learning charts, and our success, we're highly successful. Our success ratio is 70%. 70% of the trades we're taking are profitable. I'm just going to bit past it. Bear with me a moment. Bottom of the spreadsheet. And this information, by the way, is publicly available on our site. So you can see out of 62 trades we've taken this year, 69% of them, 8%, we are walking away with profit, which is a very, very high standard. And of course, we're working to improve that. So we're teaching people how to trade, how to read charts, and the profits we're making are very much bigger. You can see bigger trades here, 129% and 38. So we're making much bigger profits than the average trader out there swing trading the market. Period where we had 10 trades in a row, and latterly we big trade 129% on USM, which I'll talk a bit more about in a moment. But over to you guys if you want me to charts. Okay, gold and gold miners. In a nutshell, here's my take on the gold miners. In fact, I'm going to lead you to your own conclusion. We're below all the moving averages on the daily chart. This is the GDX. The 50 and the 20 are moving downwards. We cannot even get above the 20 moving average. Okay, our methodology is not rely on the daily chart alone. That's what amateurs do. We are trading with the institutions. We're basically following institutional money. It's not mum and pop at home that move markets, it's the institutions. And if we know what they're doing and we can identify the levels where they're going to take a stock higher or lower, we're going to win. We always have to have our edge, and we trade with an edge by looking at the weekly chart on the right hand side. You can see we are stuck here underneath both the 20 moving average and the 50 moving average. We cannot get above, and the 20 moving average looks like it wants to sort of, well, it's been going sideways. This is very, very weak. GDX is going down. Let's look at GDXJ, which I'm sure will be a similar story. Well, it is. I've seen this earlier. Look at this. It's even weaker on the GDXJ. We topped out in September. This was a fake out. And this thing wants to go down. It cannot even close above the averages on the weekly chart. And again, we're below all the moving averages. We're going low. Forget about Peter Schiff on CNBC and Bloomberg, and I think he's Euro Pacific Capital. Gold's going to $5,000. I don't even watch him anymore. I mean, I used to watch him for entertainment in the old days, but now I don't watch the news at all. Forget what these talking heads are saying. They're talking nonsense. Don't look at any of the news channels. Don't look at analysts. You want to know what the future is going to hold for stocks? Read the charts, because the charts is your only truthful resource. Company directors can lie. Journalists, analysts, hedge fund managers, they can all lie because they want to get you on the wrong side of the trade. Don't trust anybody except the charts. So, GDX wants to go lower. Let's look at spot gold. Okay, ooh, this thing wants to break down any moment now. Guys, can you see this? Look at what I'm looking at here. Wow, okay, this thing's going down. This thing is going to come down and it's going to test this low in the coming month or two. Again, I'm not even interested what Janet Yellen's going to do with interest rates. I don't know. Again, I don't look at the news. Like, I just don't. It's of no interest to me. So, the 50 moving average on the daily chart turning downwards. We can't even get above it and it's turning down. Now, in the next day or two, the gold miners should actually drop quite sharply. Look at this on the weekly chart. We're below the 20 moving average on the weekly chart. Can you see these candles here? We can't even close 1 week above and stay above. We pop up for a day or two and we come back down. That's here. Here, this thing is going. This is spot gold is going down. I mean, this is the GLD. Let me just look at the actual spot chart. Get it. There it is. Same situation. Look, see. Look at the institutions. The institutions are not taking this above the 50 moving average, and we've even got what I call a topping tail. Look at this. This is now spot gold. We were looking. Look at this. We cannot close 1 week above that moving average. This is bearish, and the real sort of icing on the cake is the fact that we've got this 50 moving. Enough said on gold and the gold miners. I'll talk about it if you like. How you can trade it. But I'll tell you a bit more about trading with. What I'm going to do is I'm just going to go off the air for 1 moment and I'm going to reduce to improve the Okay, can you guys hear me? Is that better now? Streaming should be a bit smoother now. Okay, do you want me to talk about the gold miners again, or did you catch on the fact that I'm bearish on the gold and the gold miners? Okay, so basically I'll run through this again very quickly in case you didn't follow. Okay, so we're looking at spot gold now. This thing wants to go lower. We've got the 50 moving average on the daily chart turning downwards, and we cannot get above the 50 moving average. We've even got a topping tail. This is the institutions talking to us. They want to take this thing lower. Looking at the weekly chart, we are now congregating underneath in a bearish manner. We're congregating underneath the 20 moving average, and we can't even close above it. This thing wants to get down to around 1240, 1250 level maybe. Let's go to GDX. Is the streaming better now, guys? Oh. No, I don't worry about news at all. I'll tell you why. The charts will now listen to this carefully. The charts will tell you everything you need to know, and the charts will tell you what the given reaction will be to a given news event. I'll say it again. The charts will tell you everything you need to know, and the charts will tell you how a stock or a commodity will react to a given news event. How often have we seen, Apple might report good earnings, and the stock will go down. So no, I absolutely do not worry about a big event. The charts determine which way gold and commodities will move. Trust the charts. Let me give you an example. of how I put this in practice recently. If you go to my front homepage, I'm not going to do it now because say that the connection's a bit slow. If you go to my front homepage, tradingwithzach.com, you will see a video on the Superman Trader video on the front page there. But basically, you may have known that T-Mobile was supposed to merge, and the talks fell apart, and T-Mobile dropped. Basically, I went short T-Mobile. I bought put options on it around this time here, about a month ago on the 20th of October. The stock dropped and I walked away with 122% profit. It's all documented on my website in the Trade Alerts page. You take the 7-day free trial and get access to that as well. No credit card needed. But basically, the stock, I only found out the T-Mobile was in talks to merge with another company after it dropped down to here. And I said, wow, why did it go down? The talks have failed. I said, I didn't even know that they were in a prospective merger discussion. It's not part of my repertoire. It's not in my kit bag, the news. Read the charts. Now, how did I know the stock was going to go down? Because I'm looking at the moving averages. I'm seeing what's happening on the weekly chart. Remember, the charts will determine which way a stock will move and not the news. Okay. Catch my analysis there on the gold and the news. Boom, boom, boom. Okay. Right. Okay. This is still in an uptrend. We're looking at the weekly chart. Remember, you want to trade with an advantage. You want to trade with the institutions, not against them. Look at weekly charts and have it on the screen at the same time as the daily chart. So this is just a normal healthy pullback. All the moving averages are moving upwards. 20 moving average is still moving upwards. It's just a nice, normal, healthy pullback. This will be your point of support. This big gap fill here. Can you see? Now, this is how using weekly charts will give you an edge. There's a gap here, but it's not immediately apparent. Okay, the stock closed here, and then the next morning it opened here. But if you look at the weekly chart, looking at the weekly chart gives you X-ray vision. You can see easily on the daily chart. So we've got this gap fill here. I would say if we pull down into this level in the next few days and we get a bottoming tail, possibly we may get down here. I don't know. This should be a good buy for a bounce up to around this level. Now, will it continue going higher or will it sort of level off and then start turning downwards in the coming months? It will all depend on this magical 50 moving average. If this 50 moving average continues going downwards, and if the stock congregates under that 50 moving average and it can't get above it, then yeah, there's going to be downtown Charlie Brown. But until such time as we get up there, it's too far ahead to say. But at the moment, we're into support for a bounce. Let's look at the other one you wanted. Small cap biotechs. See, small cap biotechs come in all different shapes and sizes. Let's look at the IBB, although that's the big biotechs. A very similar thing here. There was someone I was talking to earlier. We are into solid support on the IBB. Looking at the weekly chart, we've hit the 50 moving average. We're already getting a bounce. Look how powerful these levels are. Most amateurs are looking at the daily chart. They'll say, oh, look, this is the 200 moving average. And they would buy it there and bam, the stocks come down. Why? Because look where the actual level of support was. It's the 50 moving average on the weekly chart. Again, amateurs are only looking at the daily chart. We need X-ray vision. We've got the weekly chart to tell us. This is where the institutions are stepping in. Now, two factors for the trade here. I know you didn't ask me about the IBB, but it's important to talk about it. We've got two solid factors here. We've got the 50 average which is moving upwards. The stock's still in an uptrend, and we've got this pivot low here. So that is support, and the stock's already getting a bounce. This should get a good bounce up to around the 315, possibly 320. Same thing. We have to watch what happens with the 50 moving average. Do we jump above and continue going on into outer space, or do we get stuck around here and go sideways? So time will tell, but you should get a good bounce in that. Okay, the small XBI. Okay, so with the XBI which we've looked at, so that's a small cap. You know, it's in an uptrend. We're in a good level of support here. And don't forget, we're coming towards the end of the year. You normally have a Santa rally, and biotechs, historically, biotechs tend to run in January. So this thing should have some good upside over the couple of months, particularly towards the end of the year, because of the end of year window dressing, and for capital gains tax purposes, people want to carry their losses forward. So yeah, this thing should continue upwards. You're into a good level. Okay, interestingly enough, I'm not too hung up on different sectors. So if you ask me which sector am I most bearish, I mean, I look at every sector. I'm looking at so many different stocks. I don't think there's any one particular sector that I'm particularly bearish on. I would have to say it's the gold miners. My good friend, the gold miners. I mean, I did very well with this time last year. One of the trades we've got on our track record, if you go to the website tradingwithzach.com, go to About Us, and the track record, you'll see one of the first results for the website was 164% gain. I'm bearish on this. I'm bearish on this. Monthly chart. Yeah, this thing wants to go lower. Now, there's a problem. With the GDX, it's lost its volatility. You know, even if it comes down here, that's a drop of 6 or 7%, which is not massive. Whereas in the old days, this thing would drop 20%, and you know, the drop that. So I'm bearish on gold and the gold miners. Let's look at the dollar. Look at this. The dollar wants to go higher as well. We are above the 50 moving average on the daily chart, which is now turned upwards. And this thing, as long as this thing stays above the 50 moving average, this dollar wants to go higher. And now look at this. This is very telling. On the weekly chart, we are above both the 200 moving average and the 20 moving average. Now, the 20 moving average is telling us this thing is in a medium-term downtrend, but that's now going to change, because as long as the P stays above here, this moving average will now turn upwards, and then we will be in an uptrend, and then gold is going to the woodshed. So yes, I'm bearish on the precious metals. What am I bullish on? Question. There isn't one sector in particular that I'm bullish on. Let me have. I've got in mind. Got a short list of stocks here that I want to enter. I'm going to cycle through very quickly. So I'm bearish on the gold miners, as we've said. This thing wants to go down as well. Let me find something for a... IBM's also into solid support here. We've got this gap fill. When the price comes down, it's filling the gap. That should get a good bounce. And also we're into the 20 moving average. For a long. Find something. A lot of trade setups that I'm coming across are very much to the downside. SDRL. Okay, you want a long? This looks like it needs a few more weeks, maybe another month or two. But as soon as, look at this, again, the weekly chart, you'll trade with an edge. Look at this. We've got the 20 moving average, which is now leveling off, and it's turned upwards for the first time. Right, the moving average last week was at 32 cents. It's still at 32 cents. So just give this a few more weeks to turn upwards, and you get a bull flag. And as long as you remain above the 50 moving average, this thing should now shoot up. This thing may go up 200%. All we need is another move up in oil, and you basically want to time this. This is important. Don't just buy this willy-nilly. You want to buy this when the markets have a pullback. You want to buy it when the markets are recovering from a pullback. So we may get a drop in the coming weeks before the Santa rally. The markets may pull back for 5 or 6 days. That's when you want to buy, right at the sort of low. But if you come and join me on the site, I'll let you know when that is, because I'm watching all the time. So and I'm ready to enter some longs, but only after that market pulls back, because when money flow goes back into the markets, this thing will shoot up. This thing will jump in the blink of an eye. It will go up 200 or 300%. That's in my short list. Hi Jeremy, welcome aboard. That. Aren't too many stocks I'm bullish on. Most of the trade setups I've got are to the downside. This is AEM, Agnico E-Mines. Again, this one's in the GDX, but just look, all of the gold miners want to go lower. This 50 average is just going to kick this thing on the head and just knock it down. I can't really find any long sectors that I would go long. I mean, obviously, if we let's look at Apple just for the record, because everyone wants to talk about Apple and Netflix and Amazon. These things are in a long-term uptrend. Can I trade them? No, I can't chase. I can't buy it up here, because at any time it can sort of suddenly go down. There's no setup on these things. All I can say is uptrends can continue for some time, but I'm not the type of trader where I just jump in and say, look, it's in an uptrend, let me just jump in here. It doesn't work like that. I'm much more strategic. I'm much more surgical with my entries. If you want Netflix, this is into support. It's above the 50 moving average. Again, you want to time any longs. If you want to enter any of these large cap popular stocks, the FANG stocks, you want to time it when the S&P 500 bottoms, which will be sometime in the middle of December for the Santa rally. So this thing may come down in the coming days. Anytime. It's not price so much, it's date. So around the 15th of December, maybe a month from now, give the S&P 500 a chance to pull back, and then you can go long on whatever it is you'll pick up. Okay, so for those of you guys that have just joined, so I'm Zach from tradingwithzach.com. I provide a trade alert service to my subscribers, and we trade options for much bigger profits. Win ratio, let me show you, is around 68 to 70%. Time, 70% of our trades we are walking profit, and much bigger profit than trading stocks directly. If you go to the front page, you'll be able to go to the track record in the about thing and take a look at. So interesting video which I mentioned a few moments ago. You guys caught that, but the trade I did on T-Mobile when they were about to merge, this was the video you should see. Only 2 minutes long, but you'll see how powerful charts. ALDR, let's take a look, Dino. Okay, very interesting one. Okay, so the stock is still in a downtrend. Don't get fooled by this. Now, a lot of people would say, oh look, I bought here, I caught the low. This thing is now coming back down. I would not go long ALDR until the 20 moving average moves upwards and we start consolidating above it. Okay, because this thing is still in a downtrend. Look at the moving averages on the weekly chart. Don't be fooled by this bounce. This could be a dead cat bounce. I wouldn't go all out and say it's going to go lower because it could bottom here. It's not so clear cut. But if you want to go long this, because most people are looking at things like this to go long, you want to wait until the weekly 20 moving average levels off and turns upwards, and then you get bullish consolidation above, and then you can jump on. If you jump in here, this thing could go down. You could be stuck in it for months. Let me show you an exact replica of this. Now look at this. SG1. Now this is a really beaten up oil stock. I just want to check, is everyone with me on this? Oh, sorry. Sorry guys. Okay, let me go through that again. Okay. ALDR. Okay, so I wouldn't jump on this because this thing is still in a downtrend. We're looking at the weekly chart. We've got the moving averages pointing downwards. This thing is still in a downtrend. And there's nothing here that tells us it's bottomed. Now we've got a major bottom here, but this thing could still come back down. We're going to come down and test it. It may pass the test and hold. It may not. We don't know. What you want to do is, and even if you bought it here, you would have gone up, you would have risen 45%, you would have held on and said, look, it's going to go more, and you would come down and it would probably stop you out. So I don't play bottoms like this. What you want to do is you want to wait for a few more weeks, maybe a month or two, for this 20 moving average to turn upwards. When the stock levels off and consolidates, that's when the institutions are loading up. Once that 20 moving average turns upwards, it's telling you the stock is now in an intermediate uptrend, or an uptrend will be about to begin. You want the stock then to pop above the moving average and go sideways for a few weeks, and that's when you can load up. Let me give you an example. Everyone with me on that so far? Do I see the ALDR? Okay, great. Right, now let me show you what you want to see happen. Let's look at SGY. This is a really beaten up oil stock. Look at the right hand side. This stock was $1,000. It came all the way down. Now, if you played this low here, you'd be waiting for many months. Yeah, it's gone up, but then boom, it's come down. Why? Because it's still in a downtrend at this point. Look at the moving average, is still moving downwards. Now what's happened here? The moving average has now turned upwards to tell you, the stock is now in a medium term uptrend, or that is about to begin. But as soon as that moving average moves upwards, then we consolidate above it. Let's just go back to July and see what that looked like on the daily chart. Look at that. Look at that beautiful consolidation here. Let me put the circle in. See nice tightly forming candles. This is all in our tutorial library, how to spot these things. So, and we're above. As soon as we pop above, we're consolidating. That's when you want to get on board, when you're going to be in a sustained long-term uptrend. So if you would have entered around here, got nice tightly forming candles, boom, that's when you want to catch it, because there's less chance of the institutions turning this thing downwards. So you would have entered around here, give or take, averages turned upwards, and boom, would have gone up, let's say, that far, around 42%, 40%, without getting stopped out. Then they brought it back again, but again, as long as we're above this 20 moving average, look how powerful these levels are. You're going to have x-ray vision by looking at weekly charts, and also the correct moving averages. Boom, they're taking it higher again. So that's the kind of action you want to see. When a stock bottoms, don't just try and catch a falling knife. Don't just step in, because it takes months and months to bottom. It takes months to consolidate at that low, and then the institutions will take it up. But you do not want to be sitting in a stock for months and months, because you're just going to lock up your capital. And if you've got options, you're going to get screwed. Right. Okay, right. We are in an uptrend. This looks like a good point at which it will support. We're still below the 50 moving average. Never underestimate. This is tutorial stuff, guys. So I'm giving some of this stuff away to you for free. But if you come on board tradingwithzach.com and you join as a full member, it's only $99 a month, which really is a giveaway. For the information you get and the knowledge you get, it's a giveaway. But you'll see in the tutorial, once we are below the moving average, that normally portends downside. So I would wait for this thing to get above the 50 moving average. We're in a medium-term uptrend now. We've got the 20 moving average moving higher. This is a nice, gentle consolidation. You're good to go on this. You can buy. Just wait for it to pop above and close above the 50 moving average, and boom, this thing should really start to make new highs. Again, it may take a good few weeks or months. So yeah, this is good. There's nothing wrong with this. Now eventually you'll really start seeing the stock move when the 50 moving average also turns up. But you've got the 20 behind you, so that's good. You're good to go on that one. So yeah, so if you like this kind of analysis, and you'll notice from the technical analysis I'm doing, it's not conventional. Most conventional technical analysis are looking at MACD, they're looking at RSI, they're looking at Bollinger Bands, they're looking at so many indicators. Their screens are so cluttered. I mean, I went on YouTube the other day and I said, let me see what the other guys are doing. I think one look at their screen and there's too much on there. It's information overload, whereas I keep things simple. I'm just using three averages and 2 time frames, and that's it. I'm not even looking at volume that often. Okay, CNET. Okay, nothing to do here. The stock looks like it wants to go lower. We've got the moving averages on the weekly turn downwards. Nothing to do. I would not go long. It wants to go lower. You could argue and say it's into support here. See this gap fill? You could argue and say that wants to go. That's support. I wouldn't. Let's take a look at the monthly chart. Ooh, look at this. Again, you want X-ray vision. This is now the monthly chart, which we also sometimes look at. Look at this. 20 moving average on the monthly chart. Now turning upwards, and we're into solid support there. So that's upwards. Just see if we've got a 1-8 area. Yeah, I would say somewhere around in this range could be a longer-term buy. But some of these stocks take time to actually turn around and move. But yeah, when they move, you want to time this when the S&P 500 experiences a pullback, and then you want to catch the bottom on that, which should be around sometime in mid-December, and boom, you should be good to go. I would, from my point of view, I would want a bottoming signal here. I would want a bottoming tail. I would want some other factor. So I'm not the type of trader that would just jump in because it looks good, but you've got the monthly chart in your favor. So yeah, this could be one for the while you guys are here, let me just take you for a quick tour of the site. Show you a trade alert. So when I want to alert my members that I'm entering a stock, log into the site, they get an notification email, they log into the site. Show you a good one that we look at that trade on T-Mobile. So this is the type of alerts I'm providing. It's basically the same stuff that's straight and to the point. I provide a description of the trade very briefly, a chart if you're on the go and you can't watch the video there and then, you can just see it as a snapshot there, and there's normally a 5-minute video, 5 or 10-minute video telling you why you can something. That's a trade alert. Now, by watching these trade alerts regularly, almost every day or every other day, each video is only 5 or 10 minutes long. You're going to learn to read charts like I am, and it will become second nature to you. So you're going to be learning as we're taking trades. Show you page. Compare us to other websites or other trading education sort of seminars. I have a cousin who lives down in Florida, and he's a distant relative of mine. He's not my immediate cousin, and he told me, he said, "Oh wow, I see you've got a trading website. I've just finished a course that I did. I saw advertised on Facebook." And I said, "Oh no," I said, "I wish you came to me." I said, "How much did you spend?" He said, "I've just spent," listen to this guys, spent $17,000 going on a like 1 or 2 month course. It was probably information overload. He spent all that money up front, and you don't know, or he doesn't know, if he's going to be consistently profitable. Just come off the course, $17,000 lesser off, and his head's in a spin. It's going to take time for him to learn and get experience. The main thing with trading is watching trades live, watching somebody trade, telling you when they're buying and selling, and just living through it and looking at the setup as and when the trade unfolds. So that's how you're going to learn. Now, tradingwithzach.com, other websites out there are charging thousands and thousands of dollars. There's guy on Facebook. I've looked at his website. $3,000, $4,000. That's crazy. It's nuts. Right? That's to part with so much money up front. Tradingwithzach.com. Listen to this. It's just $99 a month. I'm giving this stuff away for $99 a month. Getting trade alerts, but you're learning as I'm issuing the trade alerts. Plus, I've got a whole library of tutorial videos. So a lot of the things I've described so far, you're going to be able to in the tutorial video. Okay, so this is just before we move to that stock you want me to look at. So when we close a trade, I issue a trade alert. You come and log in, and there it is. We've sold it for 129% profit. We caught USM, and so that's basically how it works. It's that simple. Right, I'm making sure I switch back to the charts. Oh wow, we're into beautiful support here. Beautiful. Look at this. The stock is in an uptrend. All the moving averages on the weekly chart are moving higher. Let me just quickly look at the monthly chart on the right. We're in an uptrend. We've got this pivot low. This is very similar to the IBB. We've got this pivot low here. Put the line in, right? And we're into the 50 moving average. This is a good buy at this point. Now, will it go on to make new highs, or is this a dead cat bounce? That will be determined depending on what we do when we reach, this is what I was saying earlier, I don't know if some of you guys were with me maybe half an hour ago. A lot will depend on what we do when we get up to the 50 moving average. If we go straight above it, then this thing could go back to the highs. If we meander around the 50 moving average, which is now turning downwards, if we get stuck underneath it and we can't get above, we've got the 20 moving average turning downwards, telling us this uptrend could be over and this thing may want to turn down, but a lot will depend on what happens to the average. Let me show you another example. Let's go to INSEE. Just want to make sure everyone's with me so far. Let me show you what happened to INSEE. We came down. We bought this level of support, by the way. This is one of our trades in our record. We caught this bounce. Now, can you see the 20 moving average is moving downwards? So that tells you there's a change in trend and we're going to be in a downtrend. What happened when we bounced? So as I said, we isolated this level, we caught this bounce. But look what happened. This stock is meandering under the 50 moving average. It can't get above it. As soon as that 50 moving average is about to kick it on the head, boom, the stock goes down. Now, unfortunately, I missed this. I didn't see it, otherwise I would have traded this to the downside. But you can see what happened. We can't get above the 50 moving average, it's moving downwards, boom, the stock goes down, and this thing could be in a longer term downtrend. So that's the kind of stuff you want to look for when you catch things for a bounce. So I'm not a long-term investor, I'm just swing trading. I'm catching moves up and moves down. This is the kind of stuff I'm teaching subscribers on the site. So if you like what you've seen so far, you guys want to take the 7-day free trial. If you've enjoyed or you're enjoying this live webinar, you're going to love being a full member. Charts day and night. Sure, let's look at SIL. There isn't much volume on this, but nevertheless, a bellwether. Okay, look, see, silver's already been slaughtered. Right. So, look at this here. We moved under the 50 moving average. Boom, the stock comes down. So we're into support here. We're possibly oversold. Let's look at the monthly chart. Now this is the giveaway. The monthly chart. Again, you want X-ray vision. We have now closed, or we're going to be closing below. If we stay here until the end of November and we're stuck underneath this average, this thing's... I wouldn't buy this. I would stay clear. Silver's the same thing. Let me have a look at spot LV. Yeah, same thing here. Can you see we can't get above the 50 moving average? We're below all the moving averages. Silver wants to come down, and it's just a case of waiting for the event to prompt it. Silver Wheaton. Changed their name, didn't they? Change their name to same story. Precious metals, isn't it? That's it. With precious metals, probably the same story. Ooh, this is interesting. This is an anomaly. Right. Look at this. The moving averages are turning upwards, and precious metals is now consolidating above, and we're above the 50 moving average. This is an interesting anomaly. Let me just look at the monthly chart. Yeah, interesting. This thing wants to go higher, but it's against the rest of its sector. So there is an anomaly there. I would generally keep away from anomalies. You want to trade with the wind in your sails. Okay, so anything else you guys want to ask? One thing that you're learning from, watching this webinar is that Zach.com, I'm not interested what analysts are saying. I'm just following the charts. Okay, now Haley, this is a very, very interesting thing you've asked. You've asked me to look at JDST. Now, I've often traded JDST. However, all my analysis is on the one-time ETF. So that'll be GDXJ. Because JDST is absolutely skewed. It moves 3 times as much as what GDXJ does on a daily basis. So all your analysis has got to be on this, and then when you want to go and trade JDST, that's fine. I mean, that's what I do. You'll see my track record if you go to tradingwithzach.com. Look at the track record. First trades at the bottom, I made 164%, and that was on JDST. But my analysis, in fact, you can go in, if you do the 7-day free trial, come to tradingwithzach.com, sign up for the 7-day free trial, you'll have access to the trade alerts. Go back to the trade alert of December 2016 almost, and you will see how, we walked away with 164% profit, but all the analysis was on GDXJ. Very important. Never, ever, ever do any analysis on the leveraged 3 times ETFs. Just don't, because it's a skewed reading. It doesn't tell us anything. So, for the record, looking at it here, yeah, it looks like it wants to go higher, but again, it's totally skewed. I wouldn't even. So GDXJ is looking like it wants to go lower. Now it's already come down. I think it's gonna get down to this low here sometime in the next couple of months. So JDST will be going much higher. I mean, we can sort of make an estimation. If JDST comes down to the double bottom low, it will drop around 6 or 7%. So JDST will go up. It won't go up 3 times as much. I know it's a 3 times ETF, but the way in which the leverage works means it will go up maybe twice as much, maybe 2.5. So that'll go up about 15 or 20%, which would mean about there. So this thing may get up to the 76 level if GDXJ gets down to this low here. Right, guys, I think we're going to carry on for another few minutes, and then I think we're going to bring this live webinar to a close. I'm so happy you guys have joined me. There's one thing I want to show you, the trade on Tesla. I don't know if some of you guys follow me on StockTwits or my Seeking Alpha blog or on Who Trades, but basically I called the bottom in Tesla just over a week ago, and I had the rest of the trading community want to hang me out to dry. They're telling me I'm nuts. Tesla's going much lower. I mean, this thing dropped 25%, and I called the low. If you want to know how I did it, go onto the YouTube channel, which you're already on, obviously. Go and watch the video where I've said Tesla, this is a no-brainer buy, or Tesla, this is the low. See, I wasn't watching the news. I'm just reading charts. The charts will tell me where the institutions will step in and support a stock. The charts will tell me where a stock is going to go, and the charts will tell me when I need to get off a trade. And the charts will tell me where the institutions are going to slam a stock down. So forget the news, just turn it off, because it will just be a distraction and it will lead you astray. And do not listen to anybody else. Don't listen to other traders. Don't listen to people about how much money Tesla's losing, or it's got no cash flow. Forget. Everything is in the charts. Everything you need to know. So a week ago, again, go and watch that video on Tesla in the YouTube channel, and you'll see how Tesla has formed a bottom against what everyone else was saying, and boom, the institutions are now taking it high. I reckon this thing can get up in the next week or two, can get up to the 330, 340 level. But again, this thing is now turning into a downtrend. We've got the 20 moving average moving downwards. Everything will hang on what we do when we get up to the 50 moving average, which is now moving downwards. So yeah, I would like to short gold. I really like spot gold, the GL. Let's look at the GLD. I really like this to the short side because I mentioned this earlier about an hour or two ago. We are consolidating in a bearish manner underneath 20 moving average. Now, although the 20 moving average is moving upwards, the fact is we've got a very bearish setup here and we can't get above that moving average. So we're congregating underneath it. This thing wants to go low. The only problem is there's not much volatility in it. If gold came down there, it's 3%, 3.5%. I'd have to go and see how expensive the options are and if it's worth doing it. So I wouldn't really trade the GLD per se, although it's very bearish. It does want to go down. I would more like, I'd have to sit down and see which vehicle will give me the most bang for my buck. And that would all depend on how cheap the options are. I mean, it could be if the put options are pretty cheap on GLD, sure, I'll go for it. I'll go for it more than GDX. But I have to sit down and Alright guys, I'm going to wrap things up. I want to thank you all for joining me. We've been going for about 3 hours now. It's really been great having you. It's been a small group, but that means I've been able to answer your questions and go into detail. As I say, if you like the type of analysis I'm doing and you think this is a breath of fresh air, it's only $99 a month. I mean, you do the free trial for a week just to get a bit more of a feel for how this works, but for $99 a month compared to all the other courses out there and all the other websites that are charging much more, and I'm not charging additional amounts for courses. Look at this, everything's here. The members area, I've got the alerts section there, we've got the tutorial videos. Let me just quickly take you through that to show you all about. So I start from scratch. This is especially useful for newer traders, so how to set up your stock charts and how to understand what you're seeing on the screen. Those of you that have been trading a year or two, you know, sure, it's still useful to watch it, and I even give you a link how you can get to stock charts for stock charts. Then I talk about options again for those of you that are not familiar with options. All the resources out there on YouTube are so long-winded and complicated. I've just got a 20-minute video here which tells you everything you need to know about options in 20 minutes. And it's so clear. So you'll understand that very quickly. Then we talk about the different types of setups. And again, this is in the tutorial section for full members. Those that subscription, then the flush and blast off play. It tells you where the institutions fake the public, or they lead the public to thinking they're going to move stock one way, and guess what? They take out the public, they trigger their stops, and they turn the stock around. So you want to watch that one. Then this is here in detail about the bid-offer spread and how we profit from it. When you're trading options, the bid-offer spread can be quite high, but I show a way, and in fact I've got live trading videos in that tutorial where I show how I enter a stock 35% cheaper because I know how to enter it at the bid price. Here, and then I've got tutorial 7, which is perhaps you've seen, you've had an eye-opener into it in the way I've been describing some of the setups of stocks we've been looking at, but that's really powerful. This tutorial really shows you how prevalent this setup is. So you know, have a look at the site. There's a lot of free resources here, and you know, if you really want to master trading, you want to understand how to trade with an advantage, you'll be ahead of everybody else. You know, what are you guys waiting for? Just come along, tradingwithzach.com, and I'm here. I'm putting trade alerts out really frequently. You can get in touch with me, and I hope to be doing. This is the first webinar I've done. I hope to be doing the webinars going forward, really for members. I just made it public just to sort of entice some more people and just to publicize the site a bit more. But going forward, I'm not going to be doing it in an open forum like this for that much longer. It's only going to be. Alright guys, thanks a lot. If you've got any questions, feel free to email me, Zach at tradingwithzach.com. So I want to thank you for joining me, and I want to wish you guys a good evening and good night. Thanks guys.